Welcome back everyone, I'm John, this is the channel of Moon High Effects, and today we're having crypto trading lesson number 17. What are trend lines and how do we spot them? That's gonna be the question for today. Let's take a look how we draw them. The previous lessons we were talking about support and resisting lines and how to draw them. I hope you guys practice this a bit, because afterwards we're gonna learn how to draw trend lines and how to spot them too. So that's also very important. One, a trend line shows you which direction the market is going, and second of all, we can also use them to pinpoint a very nice entry point. So let's take a look how we're gonna spot them and how we're drawing them. Types of trend lines: up, down or sideways. We have them. But the sideways are also the support and resisting levels. You can put them also, but you can also put some trend lines into it. The first one, what's very important of trend lines is that you need 2 to 3 points where your trend line hits and that your market constantly comes back to. If you look at here, you have an upper point, 1, that it touches, and your second trend line went to this point and he touched again. He makes 1, 2, 3, 4, 5, 6 touches in this trend line. But the first time he drew this trend line, it was possible just from one point, the second point, and extend this line so that you know when the market comes back to this line. He has a hard point for getting through this part. So that's why we take at least 2 points, and we always use the higher lows on a downtrend. And in an upward trend, it's the opposite side. So you can see in a downward trend, we draw the trend lines on the upsides, and in a downward trend and an upward trend, we draw the trend lines on the downside. Oh, sorry guys, I'm not good to work yet. So, okay, let's go further. So you see that we have 1, 2, 3, 4 nice points that we hit up it. When the trend is going downwards, we draw our trend lines above it, and when the trend is going upwards, we're drawing our trend line below it, that we know he's coming back to that point. Because if he breaks through the point when we're going upwards and he breaks through the downtrend or the trend line that we put under it, that means that he is changing direction, that he's going downwards at that point. That's very good to know also, that you know when the trend is going to change direction also. So that's one extra confirmation that you have when the trend is changing direction. It's the same way for an upward, for a downward trend. When he breaks through your trend line that you have drawn and he stays above it for a few days, that means that he could take a retest on that trend line and go off in another direction. So that means that he could go upwards. Trend lines have always a minimum of 2 touches, and if in the beginning I wouldn't draw them on the wicks, I would draw them just on the bodies. But afterwards, once you get used to it, you will be able to draw them by just letting them touch the wicks, and you will see that's quite accurate also. You have to know when this upward trend, you can see that they almost formed a doji just on my trend line. That means that the trend line is continuous, going the same direction. So if this was under it, that meant that the trend line could change direction. So we also have here a pin bar, what I really like, so a hammer that you can see that was a very nice entry point, and it also keep going the same direction. Here we have an unfungled bar, so he's going separately back to my trend line. When he touched my trend line, we have a nice entry point, so we can take the market again with us. So that's how we can pinpoint very nice entries. The same for shorting. If we are already off the trend line and shorting down, we are leaving the market alone. We're not gonna touch it. But when the market comes back up to my trend line, we're gonna have a set point somewhere near this point. If it does not break through it, we're gonna short the market then downwards again, because the trend line shows you that the market is going down. And if he did not break through this trend line, that means that the market keeps going downwards. So again, he goes to the trend line and he goes again downwards. Why? Because he did not break through this trend line, and the trend line is also a sort of support or a resistance level that you can see it, and that's also nice to know when you take a nice entry by it. In the next movie, we're gonna take a look at TradingView, and we're gonna draw the trend lines together so that you can learn it doing it yourself, so that you get used to it, where the trend lines go to, and so that you can study yourself how the market will react for the next levels. On a sideways market like this one, we can also draw support and resisting levels, but you can also call this a trend line, because it has the same 1, 2, 3 touches, 1, 2 touch. In a sideways market, if you want to draw a trend line, it needs at least 2 touches. Like I said, it had 1, 2 touches upwards, and 1, 2, 3 touches downwards. So this was not an easy one to draw until the market was already here to draw this one exactly. I would have drawn them, if you wanted to have sooner, I would have drawn them a bit lower, so I have more touches, then I'm sure also to be out of the market soon enough. That's how I would have done it. Instead of taking the maximum, I would have done it a bit lower, but make sure that I was already out of the market here. If the trend line went through, I had the exit one here too, so it went, maybe this part I would not have seen completely. I would have waited until the market closed it here, and then I was shorted down. I would have entered here again. I had to wait and take an extra entry here, and then exit the market on this part. Because if you're on a sideways market, you also have to be careful if they do a breakout that you're not stuck in the market. Because if you were saying the market was going up and he did not do this last retest here, and he just did straight away going down, we were stuck in the market because we were setting the market was going up and he did not. A sideways market, you really have to be self-assured what the market does. It's not the easiest thing to do. Once you see the market going sideways, it's very nice. It's very nice and easy to enter and exit the market, but also be very careful, because when the breakout comes, he will do a retest on this line. So when the breakout comes, he will come back and he will retest this line. Then we can exit the market. But at this point, when he dropped down completely, yeah, then we're stuck in the market. If your stop loss is just beneath this, okay, you will stop. Your stop loss will be hit. Okay, that will only be like 2%, so that's okay, or 3% maybe max, and then we will left the market. When he goes back, you can re-enter the market and then take a short down instead of going an upwards market. So that's the second thing that we could have done. But for the rest, that looks good for me. I must say, try to find a sideways market too in the market. Go back in time, try to draw them, and try to see where the market entered this sideways market and why the market would exit it. Because you can see here, we have two candles together again. That means on the resisting level he goes a sideways way. Here we have a doji, that means he goes different direction. Here we have a fungal bar, that means different direction. Here we have a pin bar, also a hanging hammer, so that means also changing of direction. And he even closed it off with this pin bar, really, and then he went the opposite direction. So by seeing these candles, like, that's why I taught you guys first of all the candles, that the market can change a lot by just looking at these candles, so that you also know where to draw your support and resisting levels. Because at the end point of these candles, you have a nice view where the market will go again. I'll show you that also on TradingView. It's easier to see it there. Here we have again a sideways market. We could have entered the market here. We would have been in the market completely at this point, and he would have hit it the second time the same bottom. So that means we could have taken another entry on this point. So we have a buy enter, and here we should have had a sell order. So that means that here we had have sold everything by the point that he would reach this point. I would have taken it a bit below to make sure that we're definitely out of the market, and then put my sell order, so my short order, up here to make sure that we had that downtrend. So also here you could have had a short order to make sure until this point, but then stop your short order like around here where my cursor is now, just about 2% above the buy order. That's on cryptocurrency, by the way, not on the stock markets. The stock markets you cannot take 2% above, because this is only like 0.1%, this part. Yeah, it's quite different, the amount of percentages that you gain and change in the stock market. But with this knowledge that you will gain up here, you will be able to trade any market. So it doesn't matter if it's stock or cryptocurrency or anything else, you will be able to read them all. Sideways market. After the sideways market breaks out, we buy back at the retest, so we have a perfect entry. Have patience until it comes to you. Never run after a market. So what do I mean with this? First of all, we had the sideways market here, left, right, left, down. So we had resistance and support, and he broke out of my resistance. Like I said, it's always possible. What did he do? He came back to that resistance to tell the resistance itself that it now becomes a support because he did not break through this resistance again, otherwise he would go back. And if he did came back, that was then a fake breakout. Make sure once you see this and he breaks out, you can put an entry on the top bottom to go further upwards once you see that the candles are ready to go into the next direction. So he came perfectly back to this resisting level. He went a small bit below it, but by the end of the day the candle closed above it. So that was a nice entry because he have 1, 2, 3, 4, 5, 6 days above it. The 7th day he came back to it, he retested it and said, okay, we give confirmation that this is now a support level again instead of resisting, and we are continuing the trend upwards because we were going upwards at the breakout. If we done the opposite side, if it went downwards and he retested the downward trends, you would have seen that he would keep going downwards, then we were going to short the market. I hope you guys understand this. If not, leave a comment so that I can re-explain what breaking out and taking the retest is. So I will explain this one more short time. So when something breaks out of a sideways market, that means that we have a retest onto our trend line that we drawn, or a resisting level that we have drawn at that point. That becomes then a support level, and when it hits the support level on this point, we have a perfect entry to continue the market upwards. And once you do this enough, you will learn exactly where the market will go and also how to enter that market. Because if you do this every time, you will have 85% of the time it correctly. There is still 15%, something like that, or 10% between that you will have, the market will go against you, and you have to accept that. It's just trading. It's like it can't always be 100% perfect, but we can do our best, only our best, and because of practicing you will constantly see more and more in the market, like I do, and that's all I want you guys to learn. This is the third market that we have. This is a choppy market. We do never trade in a choppy market. Why not? You cannot predict what the market will do in a choppy market. Like you can see, it does not have an upper part or a lower part. It's just like sideways, both of them, very slowly, and it's like 2 candles, 1 candle, 2 candles. It did not grow or decrease at any percentage at this point. So it's so small, the percentages that you would have here, that it was unable to make a support or a resisting level onto this. So we leave this market alone. Try to find a choppy market also at TradingView, so that you know once you see one that you can say, okay, we'll stay away from this market. Thank you for your attention, people. I'm very happy that you guys joined again. Much love for everyone. Smile and be thankful. Love each other, and I'll see you guys in the next lesson where we start drawing trend lines on TradingView. Have a nice time. Ciao.